All right. Can everyone hear me?
Loud
Yeah,
and clear.
Awesome. Perfect. So let's go ahead and get started. So today's class is going to be about risk management. Okay. So today is going to be one of the most important classes that you guys attend. This is going to be a multi-level kind of pyramid. Okay. We're going to start with your positioning, sizing models, things like that. I'm going to be going over why risk management is important, showing you guys some examples. Then we're gonna actually talk about where do we set our stop losses, things like that. And then we're gonna be getting into, okay, how do we actually control when we're in multiple calls or puts, stuff like that? How do we actually control our risk? And then I'm gonna be showing you guys some hedging strategies that we've been using throughout the week as well. Okay. So all of these things we're gonna go over today. It's gonna be a longer class. Hope you guys are ready. In case you guys missed the other classes, just to get kind of show you guys what you missed the paper trading class, you missed the supply and demand class. Okay, you've also missed the support and resistance. We went over market structure and trend analysis, candlesticks, picking a broker, opening up a demo account, as well as market basics. Okay, so if you missed any of those classes, they will be up on YouTube tomorrow, so you guys can start watching them starting tomorrow, and they will get dispersed throughout the weekend. Okay, so I'm going to stop sharing this screen and I'm actually going to share a different screen here. Okay, so this is going to be our whiteboard. Okay, everybody can see this. I can draw on this and everything. Perfect. Okay, so let's go ahead and kind of get started. Make sure you guys are following me. So let's kind of go over, okay? Oops, I am butchering this already. So we're gonna make this just a little bit thicker so you guys can see. So there we go. Perfect. So, okay, risk management. Okay. Why is risk management important? This is the first thing that we should kind of talk about, okay? As a trader, okay, what you are technically is you are a risk manager. Okay. This is literally all you do every single day. Everyone that trades, you are just a risk manager. You're nothing more, you're nothing less. And I'm sure you guys see that with the way we trade and the things that we're doing, okay, is that we are a risk manager. Everything we do is based off of risk because this is the one business where you can actually lose your whole entire savings, your whole entire account every single day. Okay. There's no other business like this in the world. So let's kind of go over risk to reward. Okay. This is a question a lot of you guys have been asking us. Okay. What is risk to reward? Kind of to start out with. Okay. A risk to reward is how much you are risking per dollar to make X, Y, and Z. Okay. So how much are you risking per dollar to make X, Y, and Z? What this pretty much means is if I have, so you guys have seen, we have a 1-to-1 risk reward, we have a 1-to-2, we have a 1-to-3, and it just goes on and on and on. Okay. What does a 1-to-1 risk reward means? This means that if I'm risking $100, okay, that means I'm looking to make $100. Okay. A 1-to-2 risk reward means that I'm risking $100 to make $200. A 1-to-3 just means I'm risking $100 to make $300. Okay, any questions so far on this? Everyone that's drawing, I would kind of appreciate you not drawing on this right now. It might confuse people. Okay, any questions on risk reward? If you guys don't understand kind of the meaning behind it. Okay, so once again, just to sum it up, it just means how much are we risking to make X, Y, and Z. Okay, let's take a look at what that actually looks like on a time frame. Okay, let's put Monday. Oops. Let's do Monday, Tuesday, Wednesday, Thursday, and Friday. Okay, let's look at a 1-to-1 risk reward. What does that look like? Okay, I'll use Cam as an example. Okay, on Monday, Cam made $100. Okay, on Tuesday, Cam lost $100. Okay. On Wednesday, Chem lost $100. Okay. On Thursday, Chem made $100. Okay. And on Friday, Chem lost $100. So once again, we have 100 here. We minus 100. Okay. And then we minus 100 again. Okay. And then we plus 100. And then we minus 100. Okay. So when we look at this, look what ends up happening. Okay. 100 minus 100, we're at 0. Okay. So we're at 0. And then Chem loses 100. So he's at negative 100. And then he makes 100. Okay. So he's at $0 for the week again. And then he actually loses 100 again. Okay. Which means that across 5 days, Chem needs a 50% win rate to break even. BE means break even, by the way. Okay. So Chem needs a 50% or higher win rate just to be able to break even. Okay. Now let's kind of take a look at, let me get rid of this. Well, we have more people joining. Let me just let these people in. Okay. Now let's take a look at a 1 to 2 risk reward. Okay. Once again, Monday, Tuesday, Wednesday, Thursday, Friday. Friday, Chem does the same exact trading, but now he has a 1 to 2 risk reward. Okay. He's minus 100 on Monday. On Tuesday, he also loses 100, so he has 2 red days. Okay. On Wednesday, he makes 200. Okay. On Thursday, he loses 100. And on Friday, Chem makes another 200. Okay. 100 minus 100, so you're negative 200 here. Okay, Chem makes that back, so we're at 0. And then Chem loses. Okay, another 100 here, so we're at minus 100. And then Chem makes 200. So now we're at 100. So now Chem's in profit. Okay, once again, same exact trades, but his risk reward is a 1 to 2 instead of a 1 to 1. Okay, same exact trading because in the last one, Chem was plus 100. Okay, he was minus 100. He was minus 100 again. Okay, he was plus 100, and then he was minus 100. Okay, so same exact setup, same exact everything, but just because his win rate was better, he ended up being profitable. Okay, any questions there about win rates? Okay, so even if you have if you win 2 days out of 5 with a good win rate, with a 1 to 2, you will still be profitable. Okay, I'll make sure everybody can see this. Okay, with a 1 to 3 risk reward, okay, you can lose 3 days and you can still be profitable. Okay, with a 1 to 4, you can lose 4 trades and still be profitable. So the best way to kind of sum this up is whatever the second number is, okay, that's how many trades you can lose before you start going negative. Okay, so that's your cushion. So if we have a 1 to 4 risk reward, I can lose 4 days in a row and I will still be green on my 5th trade, long as I do that trade right. I will either be at break even or I will actually be in profit. Okay, so you guys see, this is kind of a probability game, right? I'm not going to compare this with a casino or anything like that, but this is, at the end of the day, this is a probability game. Okay, whether you trade stocks, options, whatever it is, this becomes a probability game, and we want to get the highest probability we can. Okay, 1 to 10 risk reward, most of the time you're not going to be hitting those. Your sweet spot should be 1 to 2 minimum. Okay, so 1 to 2 becomes your minimum. Okay, and 1 to 3 becomes your preferred. Okay, any questions there about risk reward? Okay, so I'm going to be taking you guys kind of back here on our PowerPoint, and we're going to kind of talk about position sizing because that's another thing that a lot of you guys are having problems with. And once again, we're going to go more deep as we go into this lesson, just like our other ones. Okay, so let's talk about position sizing. So everybody understands risk reward. Let's talk about position sizing. Okay, position sizing is how many contracts you trade. trade. Okay. So, oops, I'm gonna kind of go back here. And I'm actually going to do this just to make this easier for everybody to kind of understand. I'm gonna get rid of everything down here just for this lesson, just so it's easier for everybody to see. Apologies. Okay. So your position sizing is how many contracts are you trading per account or what you're taking in, okay? Here's the problem with a lot of people's position sizing. Tell me if this sounds like you. Okay? You have a $5,000 account, okay? And you're trading 5 contracts of SPY, you're trading 5 contracts of Tesla, and you're trading 5 contracts of Amazon. Okay? Can someone tell me, is this correct position sizing or not? Anyone?
Is it too heavy as for the gas?
Okay. Anyone else want to take a guess on what's wrong here with this position sizing?
Mm, we don't have like a put option.
It's
Okay.
too much exposure.
Okay. So here's the problem with this thesis that we made. Okay. A lot of people think that, okay, once again, I put the 5,000 there to kind of throw you guys off, but the biggest thing is people think that just because I'm trading 5 contracts of SPY and I'm able to trade this very comfortably, I should be trading 5 contracts of Tesla. Okay? Do you know what the problem between 5 Tesla contracts and 5 SPY contracts are? Does anybody here know what the problem
Yeah,
is? What's the problem?
it's the premium.
Exactly. Okay? Your actual cost, okay, of the trade is completely different. Okay, if you pull up let's just look at Tesla. If you pull up a Tesla, okay, it's gonna cost you anywhere from 500 to $1,500 for a weekly contract. Once again, we're just gonna talk about weeklies. I'm not gonna go into days expiration stuff like that. Okay, each contract is gonna cost you this, which means that for 5 contracts, you're either gonna be spending 2,500, okay, or you're gonna be spending $6,000. Okay. On the other hand, if we look at SPY here, okay, a contract's going to cost you from 200 to $400. So you're going to be spending 1,000, okay, to what? $1,600. Oh, that's not the right math. My math is completely off on this one. Oops. 1,000, okay, all the way up to what? What's 400 times 5? That's 2,000. Oh my gosh. Okay. So you guys see the problem here. Okay. I don't care how big your account is. If you are normally trading 5 SPY contracts and your total value for those options are $1,000, $2,000, when you make that jump to 2,500 to 6,000, do you know what happens? Your premium and your contracts and your P&L, the most important thing is your P&L. It goes up very, very fast, but it also comes down very fast. Okay? Nobody thinks about this. Everybody thinks, okay, I'm going to play 5 contracts because that's what I'm used to. Okay? Your position sizing cannot be the same across different assets because the premium changes very drastically. Okay? So the most important thing we have to focus on is our total, okay, premium cost. Okay, this is the most important thing that we first have to learn before we get fully into position sizing. Okay, the first thing you have to know is, okay, whatever account I'm trading on, a lot of you guys, I'm just gonna use a $5,000 account for example. If I'm trading on a $5,000 account, it doesn't mean I have to spend the full $5,000 every single day. My goal when you're first starting should be 1 contract. Okay, everybody should be starting with 1 contract, and you should be trying to juice out this contract as much as you can, okay? Which means holding it, doing whatever you have to. But the biggest thing is you always start with 1 contract, okay? You figure out, okay, how much does this contract cost me? Well, let's just say that it costs you anywhere from $300 to $500, okay? Which means that whatever ticker you decide to play, I don't care if you trade Tesla, but you shouldn't be going over this $500 threshold, okay? Any questions there about our total premium?
Yeah, one question, but maybe not related this. आज मैले त्यो टेस्लाको चाहिँ डेल्टा 52 हुँदाखेरि गामा चाहिँ 0.2 थियो 0.2 तर फेरि स्पाइको चाहिँ गामा 18 0.18 समथिङ थियो के हो त्यो डिफरेन्ट के होला त्यसको
Between SPY and what they?
SPY and Tesla or other
So
like
so that's
NV,
that
like
yeah,
AMD.
so good question. This is we're gonna kind of go over this in our options class day.
Okay.
It doesn't really relate to risk management.
Okay.
Okay, but different assets have different premiums. But once again, you need to stay consistent with your premium first. Okay, that's the first rule before we even get into position sizing. Okay, so now let's say that we have our position sizing right. Okay, we're trading on a $5,000 account. Let's say that we're risking about $1,000 per trade. Okay, what's the next problem that people fall into? Does anybody know? Okay, does anybody know what the next problem is? Anybody want to take a guess? Pravinday, I see that you're unmuted. You
Can
want
you
to
repeat the question, please?
No, I just like, can you repeat the question again?
Yeah. So somebody is trading on a $5,000 account, okay? They find out that, okay, my total cost per position size is $1,000, so I'm not going to go over the $1,000 threshold. So this person knows this rule, okay? What do you think this person does wrong next?
Leverage.
Okay? The next thing that this person does wrong
Stop.
is they
Stop loss.
think that Monday, Tuesday, Wednesday, Thursday, Friday, they think they should deploy this money every single day. Okay. This, whatever you find out, once again, everybody's going to have a different number. For me, it might be 10,000. For you, it might be 20,000. Okay. For some people, this might be 500. It doesn't matter. Okay. What ends up happening is you take that $1,000 and you find out, okay, that's on average is about 5 SPY contracts. Of course, it's not going to be exactly perfect, but on average, we'll say each contract costs about $200. Okay, or each share, whatever it may be. Okay, the problem now becomes that this person trades 5 contracts every single day: Monday, Tuesday, Wednesday, Thursday, Friday. This person is going in. This is called your full size. Okay. Okay, so this, whatever you find out, once again, everybody has a different number, but whatever you find out is going to be your max position. Okay, you should not be trading that on every single setup, because you know what's going to happen? You're going to get into a really crappy setup with 5 contracts, and you're going to take a big loss. And then you're going to jump into a really good setup with 5 contracts, and then you're going to make it back. And then you're going to jump into another trade. And when you're first learning your risk reward, what's going to end up happening is your P&L is going to go like this. Okay, and you're going to wipe out profits because you're going in full position every single trade. Okay, this is also a good time to talk about trade setups. We have three different types of trade setups. Okay, we have the A plus setups, we have the B's, and we have the C's. Okay, A plus setup means that you can go full size. Okay, A plus setups also mean that there are 3 confirmations. Okay, 3 confirmations or more equals a A plus setup. A B setup, you go half size. Okay, and this usually means 2 confirmations. A C setup means you only have 1 confirmation and you only take 1/4 of the full size. Okay, so now what ends up happening is, I'll just use Praveen as an example. Monday he goes in, he says market is crap. Okay, he loses $50. Tuesday he goes in, he says okay, market is better. He loses $100. Okay, so his risk is relatively low. And then Praveen goes in Wednesday. Okay, he goes in for A plus setup, full trade, and he ends up making $200. Okay, and then he goes in Thursday. He says okay, this is not a good setup. He ends up losing another $100. Okay, so your risk should not be consistent every single time. It should not be going like this. Okay, this is called, so there's this thing called risk off. Okay, risk off means that you should be really careful and you should take smaller positions. Okay, for example, this week we had FOMC. Okay, which means that up until Monday, Tuesday, Wednesday, I told you guys, okay, scale down, trade less contracts. The reason is because if you lose, even if you have a great win rate, why do we want to give back profits that's not necessary? Okay, if I'm really touchy, I will pick a trade and I will do, just 1 contract here on Monday. Okay, on Tuesday, I might do another contract. On Wednesday, I'll do another contract. Okay, but Thursday and Friday, what's going to end up happening is I'm going to go in bigger size. For example, when we look at our AMD play today, Okay. I went in with 10 contracts. Okay. I had really good confirmations. I went in with 10 contracts. Right now, my size is about $2,500 a trade. That's my average right now per trade. Okay. Yesterday, I went in with 5 contracts on Apple. Okay. Yes, I scaled into the trade once again, depending on how good the trade is and stuff like that. I will scale into a trade, but for the most part, I will usually stay or at around 10 contracts or my $2,500 total, unless I see a really good setup, and then I will either scale into the trade or I will scale out. Okay. Any questions on that?
Can I add something as well?
Yes.
So like talking about position sizing, right? Um, so let's say if you have $5,000 account, and I'm pretty sure Bhai's gonna get into this early when it comes to portfolio risk controls, man. So as a small trader, whether it's $2,000, whether it's $1,000, $5,000, like I said, maximum that you want to risk if it's your first trade, one contract, probably anywhere from 100 to 150 per trade. So you're risking about 1 to 2% of your trading account, right? Okay, on a single trade, right? So you have to factor that in. Like I said, you don't want to go all in, right? So that's if you're going
Now,
all in, that's pretty much you are gambling.
one thing I
Yeah.
do want to add to this, okay? Um, I don't care about other people's opinions, but this is just mine. I don't believe that you should have a percentage stop loss. I don't believe that you should have a percentage take profit. I don't believe in that because what is a percent? Okay. A
hmm
percent is just something that you make. You're not getting this from anywhere. I can't say that every trade I'm gonna set a 20% stop loss because some trades I might have to put a bigger stop, or some trades I might have to put a smaller stop. Okay. So if anybody tells you you should put a percentage stop, in my opinion, they don't know what they're talking about.
No,
So that's just
no.
my opinion.
You
And the
should
other thing is, go ahead, Milde.
you should always have a mental
Yep.
stop loss that
Uh,
like
and actually, yeah. So I was gonna go into that in a minute, but okay.
yeah.
But which I'll kind of circle back to that in a minute. But the other thing is, if let's just say that you're trading on a 100K account, okay? Your goal is not to make 1% a day, okay? I don't think you realize how much 1% a day is because in a month, that's gonna be 25% if you hit every single day. Okay. These are crazy levels of return. Okay. 25% even in a year is extremely good. Okay. Now, yes, a lot of traders, most of you are going to hit 300% on your account. Okay. And that's possible with day trading. But once again, when you're trading on a larger account, we're not looking, okay, there's this thing where people say, okay, there's a 1 to 3% rule, okay? And if you haven't heard about this, kind of the way it goes is you should be risking 0.5% to make 1%. Okay? I don't believe in those rules. I don't think there's a set percentage you should be risking on your account. I'm very against that because you guys will see we're looking for asymmetric risk. Okay, asymmetric risk just means I'm risking this much to make this much. Okay? Your risk should never be I'm risking this much to make this much. Your risk should always be I'm risking this much to make this much. Okay? So now we're going to kind of go into the charts here.
Prashant, I have one question.
Yes.
That's the 0.5 to 1%. That's eventually gone to the 1 to 2, yeah. Because that's the 0.5 risking and then goes to the
So
dollar.
that's a technically that's a 1 to 2, yes.
Yeah.
Okay. So let's just kind of look at, okay, I'm not going to go over entries and exits today and stuff like that. So save those questions for tomorrow. Okay. So we're not going to go over exact entry and stuff like that, but we are going to take a kind of look at some setups and stuff like that. If we look at this today, okay, let's just say, so we're going to be using the 5 minute time frame for our entries. We always talk about that. Okay. So we use the 5 minute chart, okay, for our entry. Okay. That's the first thing you have to know whenever we're using our risk reward. Okay. I'm going to refer to TradingView here. You guys can use whatever software you want for your risk reward. But if you go here on the left-hand side and you go 1, 2, 3, 4, 5 down, you have these two tools. Okay. This is your long position and this is your short position. Okay. So make sure I would highly recommend starring both of these so that they can be saved. Okay. Once you have that done, what we're looking to do is once you find a setup, and once again, we're not going over really setups today. you have to decide, okay, where am I going to take this trade? Okay. The most important thing whenever you take this trade is going to be your execution. Okay. Where are you going to enter? Because that's going to make the biggest difference on where your risk reward is. For example, okay, let's just kind of remove this here. Let's just go over here. Let's just go right here. Okay. Let's just say that this becomes our support level. Let's say that, okay. Okay. Market's coming down. Okay. 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 So let's say I want to take a call on this candle. Okay. We're going to go to our long tool and we're going to, let's just say that we end up entering at the top because a lot of you guys for right now, you're not going to be able to catch the bottom of a wick. Okay. It's going to be very hard for you to. First thing we have to do before we do anything, I don't care if you're trading SPY contracts, I don't care if you're trading shares, it doesn't matter. It's the same rule for everything. Okay. First thing we have to do is we have to figure out, okay, where is our stop loss going to be? Okay. In case you don't know, a stop loss is where we sell for a loss. Okay. So at this point, we're saying, okay, wherever I set my stop loss, this trade is not going to work out for me. I don't want to be in it. Okay. A lot of you guys also hear this term called stop loss hunting. Okay. I'm sorry to break it to you, but this is not real. Okay. Stop loss hunting is not a real thing. Why do you care? Why do you think that these billion-dollar hedge funds care about your Robinhood account that has $5,000 and that you're trading 5 SPY contracts? Do you really think you're that important? Okay. I'll break it to you. We're not. None of us are that important for them to take $1 billion position just to hit your, 5 contracts. Okay, so stop loss hunting is not real. It's just going to be the way candlesticks move and stuff like that. We just end up setting our stops that way. Okay, it's just a psychological thing. Okay, that's the first thing I want to go over because a lot of you guys think that stop loss hunting and stuff like that is real. I did think it was real for the longest time as well. Okay, so I don't blame you there. Okay, back to this. Let's say we take an entry here on this top candle. A lot of you guys are not going to be able to catch the bottom of this candle. Once again, more than likely, you're going to have bad entries when you start. Okay, so if we take an entry here, where are we going to set our stop loss? Let's just say this was our support level. Okay, you have two options here. You can either set a stop loss down here, okay, below the last wick, or you can set a stop loss on that same candle. Those are your two options on this setup. So what that kind of looks like is, okay, here's our entry. I take my stop loss and I move it down to here. Okay, when you move your stop loss, wherever you move it, big or small, once you set your stop loss, you don't touch it. Okay, next thing we have to do is we have to look for this little thing right here. This is our risk to reward. Okay, so this will show us what our risk reward is. So for example, on this trade right now, we have a 0.92, so a 1 to 0.9 risk reward. Okay, it's pretty terrible. What did I say? Okay, what's the golden rule? We want a 1 to 2. So we're going to drag this until it goes to 2. Okay, so right here. So this is called our TP or our take profit. Okay, depending on where you get in on a trade, you will be able to adjust this to make it better. Like once again, for example, if we were to get in the middle of this candle and we still have our stop loss here, my take profit would be all the way down to here. Okay, just because I got a little bit better fill. And that's why your fill is so important. So once again, it doesn't matter if you're trading contracts, okay, or if you're trading shares, you have to trade the chart. Okay, what I mean by this is stop looking at your P&L going up and down and up and down. Okay, nobody cares. You looking at your P&L is not going to move the market. Okay, and the sooner you get that out of your head, the quicker you're going to start making money because a lot of people, what ends up happening is they set their stop loss down here, but then once this thing pulls back and once this thing comes down just to here, they realize they're down $100. Okay, and then they end up moving their stop loss right here and they don't want to risk more than $120. Once again, if your positioning sizing is good and you're not oversizing, which we will go, get into later on, then you shouldn't have to look at your P&L. You should be able to just trade what the chart is giving you. Okay? Once we've identified our stop, we do not move the stop. Okay? This is a big rule that you're going to have to follow. You cannot move your stop loss lower. Okay? What you're allowed to do is you're allowed to make your stop loss tighter if you want, but you are not allowed to make it any lower than whatever you set it to. Okay? Any questions there? I didn't lose anyone, did I?
All
I
right.
have one.
Yes?
If we buy the more contract in a deeper, at that moment as well, we don't move that stop loss.
So it doesn't matter where you buy the contract, your stop loss can stay the same, or you can make it tighter, but you are not allowed to make it wider. So I cannot take this trade and I cannot put a stop loss down here because it's coming down.
But at the moment, if I can scaling, that's a win rate. If there is 1 to 2, that's gonna be changed.
Correct. So I'll also go into that in a minute. That's a little bit more advanced for kind of everyone that's new to risk management.
Okay, thank
Okay,
you.
so now let's kind of play this trade out. Okay, so we're gonna go here. We're going to go to buy. We're gonna buy 100 shares. So that represents one contract once again. Our TP, our take profit, is going to be right up here. Okay, our stop loss is going to be right down here. Okay, we're not going to move it. So if you look at this right now, we're risking about $113 to make 139. Okay, not the best. I give you. Okay, let me see if I can fix that a little. Okay, I don't know why it's showing like that, but this should be in theory a 1 to 2 risk reward. So this trade is a 1 to 2 risk reward. Okay, so now let's kind of play this trade out. Okay, there we go. Our target hits. Okay, this you guys see, today we ended up having a good trade and we ended up hitting. But once our target hits, okay, you have two options here. Okay, you have a trim level, you have a take profit level, and then you have a TP2, okay? So this is what we would call a trim level. This is what we would call a TP1, and then we have TP2, okay? We don't know where TP2 is right now. The only way we're going to know where our TP2 is now is by moving our risk reward and getting a 1, 2, 3 risk reward out of it. Okay, so what we would do in that case on a real scenario is we would take this and we would move this to 1 to 3, which is right around here, perfectly where I drew it. Okay, so once your trade goes in profit, if you move your stop loss too early, you end up completely messing up your risk reward. Okay, a lot of you guys, I've heard you guys say profit is profit. Okay. Good luck trading if you think that you taking half profit on every single trade is going to make you profitable. Because what's the difference between me taking profit right here and me having a stop loss down here? Okay, it doesn't make a difference because look what happens. I'm going to have a 1-to-1 risk reward if I take profit too early. Okay, so once you set a TP and a stop loss, you have to let one of these hit. Okay, which one ever hits first, so be it. Okay, if you end up getting stopped out, oh well, move on to the next trade. If you end up taking profit, good for you, move on to the next trade. Okay, but you have to let one of these hit first. Okay, you don't move these around, you don't do anything. Now, the other thing that I think it was Suraj that kind of talked about this is when do we actually scale in and out and stuff like that, right? If you start taking profit at the half point, what ends up happening is your risk reward completely gets screwed up once again. Okay, so the way we can combat this is we have a few different options. Okay, we can take a trim, okay, and then we can hold the rest to TP. What this would look like, once again, I'm going to use 10 contracts as an example, is if you have 10 contracts, kind of like what I did today, is you sell 5 here, okay, and then you hold the rest till they go up here. Okay, so what that does is this develops cash flow, and then this one goes to my target, and I get to sell all of them. If this one doesn't go to my target, I set my stop loss at break even. So usually, when you hit your TP, okay, when TP1 hits, stop loss moves to break even. Okay, so once again, when your target price hits, your stop loss moves to break even. So once this hits, okay, and I want to hold runners, once again, a new term, a runner is just a contract that I'm holding in case it goes higher. Okay, so whenever you guys hear us say runner, that's what it means. Okay, so now this trade has developed and it's gone into my take profit. What I'm going to do is I'm going to take my stop loss and I'm going to move it in profit now, or at least in break even. Okay, so you can either set it at, once again, break even, or you can set it at tiny profit. Okay, like 1 or 2 cents tiny profit. Okay, now what this does for my trade is now I can ride this trade and I don't have to worry about me losing my money. Okay, so that's an option that you have. Now, once again, there's many different ways you can do this. Some people, they trim, half down here and then they trim the rest up here. Some people, what they'll do is they'll slowly move their stop loss up. There's multiple different ways we can do this. Okay, but what I've seen work for a lot of people is you at least want to hit your take profit before you guys start getting into trimming and stuff like that. I would highly recommend, okay, for example, let's just look at this trade. Okay, we'll just use this trade as an example. Okay, so we're coming down here. Let's just say this is our low. Okay, let's just say there was a level here. So I'm gonna have you guys imagine that there's a level here. Once again, I'm not showing you a setup, a strategy. We're just going over risk reward. Okay, let's say I end up entering this trade right up here. Okay, where's my stop loss going to be? Can somebody tell me? Okay, on this candlestick right here, where is my stop loss going to be? My entry was right here. Okay, can somebody tell me where is my stop loss going to be?
Is it going to be like low of the day?
Okay,
त्यो
so
ब्लू
he's
लाइन
saying
जहाँ छ त्यहाँनिर हुन्छ
low
नि
of day. Okay,
Yeah, but maybe like right below low of the day.
okay, so let's draw a low of day right here. Okay, and let's take our risk reward 1 to 2. Okay, what ended up happening? Right, we would have lost money on this trade. It would have went back to our break-even point right down here. Okay, what is the problem with this setup? Can somebody tell me? Does anybody see it? Okay, there's 2 problems with this setup. One, our entry was bad. Okay, and 2, okay, this candle right here, okay, it has too much volume. Okay, which means in theory, okay, once again, I'm going to simplify this for you guys, which means that it messed up our stop. Okay, messed up our risk to reward completely. Okay, because you guys can see here, if we could have gone in the middle of this candle, okay, our risk reward, look, our TP would have hit. Do you guys see that? How big of a difference it makes, okay, on your entry. And the other thing is, let's kind of pair this with levels, okay? I'm going to give you guys kind of a real life example. Let's pair this. Somebody pick a stock.
Tesla.
Okay, Tesla. Okay, let's do levels on Tesla. Actually, I'm going to stop sharing my screen here. Okay, I'm going to stop sharing my screen here. We're going to kind of go into an exercise and then we'll kind of touch back again. Okay, I'm gonna share my screen again. Okay, I want you guys to play along. Okay, I want people that haven't been active the last few days as well, or else I'm gonna start picking on people. Okay, so we have our high, we're gonna identify this as our low for right now. Actually, I'll just do this as our low just to make everybody happy. Okay, so let's kind of take a look here. What's happening? Okay, we are going to have a level right around here. Okay, we're gonna have another level right around here. We do have some wicking here, so instead of a level, once again, we went over this yesterday, we're going to turn this into a zone. We're going to go ahead and get rid of that level. Okay, it looks like we have a good level, bounce level right around here. Looks like we have another level right down here. And then it looks like I can also add a level here. Okay, let's go down to a smaller time frame. Okay, any other levels you guys want to add? Okay, I'm also gonna add one level right up here. Okay, let's go to the 15-minute chart just so we don't overcomplicate things. Okay, for those of you that haven't played this game with us before, you pretty much either say long or short. Okay, or you can tell me to stop, or you can tell me to add a level. Okay, so we're simulating us actually trading. Okay, so market just opened up. Okay, once again, I want you guys to tell me what you guys want to do. Okay, nobody wants to enter here.
Let me take a short here.
Okay. Okay, so Blondie wants to take a short here. Let's go ahead and take a short. Okay, we're going to sell 100 shares. Okay, so we're in puts for 100 shares. Okay, where are we going to set our stop loss? Okay, so our entry is right here. Where are we going to set a stop loss? Okay, we're going to set a stop loss up here. Okay, we're going to set it right above this last wick, this last 5-minute wick. Okay, so the rule of thumb, once again, is last 5-minute wick stop. Okay, so if we're taking an entry, we're going to set our stop loss right around here. Okay, one day we're going to do a 1 to 2 risk reward to start off with. Okay, so we need a 1 to 2 risk reward. Okay, so this is Bondi's trade. Let's see what happens. Okay, we end up getting our target. Okay, and we end up exiting. Okay, so now we take a look at this. Okay, here's our entry. Okay, our entry was right here. Okay, this right here, this whole red thing, this is called your drawdown. Okay, drawdown means how red were you on this trade and how long did you have the drawdown? Okay, so on this trade, okay, can someone tell me how much drawdown did we have? Did we have long drawdown? Did we have no drawdown? What was the drawdown? Can somebody tell me?
There was no drawdown.
Okay, there was no drawdown. Okay, we only had drawdown for a split, maybe a few minutes, and then we ended up going lower. Okay, there was no drawdown on this trade. Okay, so his P&L pretty much went like this. It went up and up. It came down a little bit, and then it just kept going up because he ended up shorting this all the way down. Okay, good play. Okay, let's keep going here. Okay, once again, guys, the worst thing that can happen is you're gonna lose me a few paper trading dollars. That's about it.
Long here.
Okay, you want a long here. Okay, he wants a long here. Okay, where are we going to set our stop loss? Big question. Okay, if we enter here, okay, few things we have to look for. Okay, we have a level right here. I would personally set my stop right below this last wick. Okay, I would set my stop loss right there. I'm going for a 1 to 2 risk reward. Now, me personally, okay, what I would do on this trade, this is just me, is I would short here. I would set my stop right above this. Okay, this candle. Okay, and I would target a 1 to 2. Okay, so this is what my setup would look like. This is what he said he wants to do. Okay, let's see
Can you
what
give me
happens.
explanation why you want to do this?
Okay, okay, great question. So once again, my trade ended up going right. Okay, why did I short instead of longing? Okay, we're not going too much into class. We're not going to go too much into strategy and stuff today. But the reason I ended up shorting this trade, okay, was okay. First thing we have to look for, okay, there's selling pressure coming down. Okay, that's one thing that you missed. The second thing you missed was what's happening here. Okay, sellers are still present. Sellers are still present. We have a wick at the top here. Okay, so for me in my head, do you know what ends up happening? I'm gonna get a better entry here than I got down here. That's why I said I would rather short, and then you see how it went to my TP. Make sense?
Yeah, thank you so much.
Yep. Okay. Let's keep going here. Okay. We're gonna add levels because we don't have any levels down here. Okay. I'm gonna come down here. I'm gonna add a few levels. We're gonna do a level right here, and then we're gonna do another level right here. There's a gap, and then we're also gonna do a level right around here. Okay. Let's go back to our 15-minute here. Okay. So we would have lost money with the long. Okay. Let's keep going here. Okay. Anybody want any type of trade here? No? Okay.
Buy.
Somebody said buy?
Yeah.
Okay. He wants to buy right here. Okay. So let's go long. Here we go. 100 shares. Okay. Where are we going to set our stop and our take profit once again? Okay. His entry was right here. Okay. We're going to set our stop below these two candles. Why these two and not this candle? Okay. The reason is because down here, there is more support than there is up here. We have two confirmations down here. We have one confirmation up here. Okay. So if I set my stop loss right here, I would have gotten hit. Okay. If I set it down here, it hasn't gotten hit yet. Oh. Okay. So we ended up losing money on this trade as well. Okay. Let's keep going. Okay. Market closed. Okay. Now I'm going to go to the 5-minute chart. Okay. This is going to be a more realistic example of why, longing and shorting and stuff like that. Okay. So. Okay. So market just opened up. Let me know if you guys want to adjust any levels. I'm going to move this level actually. I'm going to move it up to here. And the rest of the levels look good. Okay. You guys let me know what you guys want to do to trade.
Let's go long by.
No, you're not allowed to give the play.
Can we go
Guys,
short
come on,
here?
let's go.
Okay. You want to short here. Okay. Let's short here. 100 shares once again. Now what I'm going to start doing, okay, is we're going to start having our stop loss and take profit set with this. So our stop loss is going to be right here. We're risking $206. We need to make at least $412. 412 right here. Okay, so this is a 1 to 2. We're risking 200 to make 100. Okay, let's see what ends up happening. Oh, we ended up getting stopped out. Okay, let's keep going. Okay, um,
Buy. Maybe buy.
somebody said buy. Okay, okay. So now let's kind of take a look at this. Okay, where are we at in the day? Okay, this is another thing that we have to take a look at whenever we're trading and we set our stop loss. Okay. Okay, market's low is here. Okay, market's high is here. Okay, so once again, market's low is down here, market's high is up here. We are right in the middle. Okay, we have two options here. We can, if we're going along here, okay, our stop loss, we're going to set wherever the last wherever we get a lot of support happening on the other candles. Okay, this time I'm not going to set it based off of this candle. I'm going to set it based off of where we are holding on the other candle. So if we look at this, we are kind of holding right around this area. Okay, so now what we're going to do is I have to validate this trade and see if the risk reward makes sense. Okay, what I mean by this is because I'm entering long here and we're very close to a high of day. Okay, is the risk to reward being forced? Okay, or is it logical? What I mean by this is if my risk reward, let's just for example say it was down here. Okay, and my 1 to 2 is all the way here. I'm gonna make this even wider. Let's say I'm risking this much. Let's say my risk to reward is all the way up here. Okay, is this a logical trade? Can somebody tell me? And if it's not, can you tell me why it's not? If it is, can you tell me why it is logical? Okay, why would I take this trade or why would I not take this trade?
I wouldn't take it
Okay, why?
because the high of the day is limited and we have to see more data to test it out.
Yes.
It isn't worth to take the trade there.
Right. So here, okay, we got a risk reward that makes sense, but the problem is this is our high of day. Okay, if we're in the middle here, my risk reward needs to be a 1 to 2 either at high of day or lower than high of day. Because I remember there's no way we're gonna go up to here without hitting this first. Okay, but beyond this point right here, we don't know what's going to happen. Okay, we don't know. So we have to ask ourselves, is this trade logical? Okay, this isn't logical because our risk reward is down here, which is fine, but our high of day is right here. I need a trade that at least goes to here and has a 1 to 2 risk reward. Okay, so what I'm going to do is, okay, now let me set this trade up just like I said it last time. Okay, so does it, I want somebody else to tell me, somebody that hasn't spoken yet, is this trade logical? Okay, is this trade logical? Okay. Robin Dai, we have Rohan Dai, we have Roshan, we have Yogesh Dai. All of you guys, come on, no one's talking. Bibek, we have you here. Come on. Is this trade logical?
Yes, bro.
Okay, why is this trade logical?
Um, there is a wick on the bottom.
Okay. Okay, but why is this trade logical? Why did this trade make sense and the last one did not?
Because you're setting the take profit not so high.
Okay.
It's more likely to hit.
Because I'm setting the take profit below my high of day. Okay, once again, it can hit this. We know it still has a potential to hit this, but we don't know if it's going to hit here, here, here. We don't know those because there's no price action up here. There's no levels up here. Okay, so let's see if this trade is going to work out. Okay, boom. It ended up hitting our TP. Okay, pretty good trade. Okay, let's keep going. Okay, put a level right here. Okay, let's keep going. Okay, I'm going to give you guys a setup and you guys tell me if you would take it or not. Okay, is this trade logical? Okay, would you take this setup or would you not?
Probably not,
Okay, why not?
because we have the support is very close to, it's very close, so I would not take it.
Okay. So he's saying because the support level is close, he would not take this short. Okay.
अनि अलिकति अप ट्रेन्डमा पनि
Um,
कट्टामा भए पनि अप ट्रेन्डमा पनि जाँदैछ अनि स्ट्रङ देखिरहेको
I think there is an imbalance. Um,
So you think there's an imbalance here?
yeah, I think I would take it.
Okay. So we kind of have mixed. Okay, let's see what happens here. Okay, Pravin Dai, you were absolutely right. Okay, once again, this trade didn't make sense because our support was right there. Why would I short? Because my true risk reward on this trade was actually a 0.7. Okay, it's not your guys' fault that, the imbalance. Yes, you were right. Okay, everything you guys said was right. The problem is when we're looking at our setup, we tend to forget. You have to ask yourself, is the trade worth it?
No.
Okay, just because there's a setup that you see does not make the trade worth it. Okay, you have to look at the risk factor because remember, we are all risk managers at the end of the day. Okay, the risk reward was there. If this level broke, 100% the risk reward was there. But because this support was right here, we shouldn't even have taken this trade in the first place. Okay, so
Prasan, I have
yes,
one. Can we move that stop loss to the not a week of the body, just not a week. We can move to the body and we can play that one.
if you want to test that, yes, we can. Okay, so now,
I have one more question on the
yes.
same place. इम्ब्यालेन्सलाई हिजो कहिले गर्नुभयो अलिकति तर चाहिँ अलिकति यहाँनिर यही कन्टेन्टलाई नि थोरै एक्सप्लेन गरिदिन सक्नुहुन्छ?
Yeah, so he's saying this is an imbalance, Kirandai ended up picking out that an imbalance does not have to fill all the way. This one right here filled all the way to down here. Okay.
Yes.
Birandai, we use the 5 and the 15 minute. So this imbalance filled to down here. So technically this imbalance does not have to fill all the way to down here. Can it? Yes. Okay. But I would want something like this. I would want something like this for it to fill, even this one right here. Right? So this imbalance isn't a really big imbalance. Okay.
Also,
लामो
by
क्यान्डल छ भने चाहिँ इम्ब्यालेन्स भएको हो त्यस्तै भनेर बुझ्नु.
This there, yes. So
yeah.
if half of this is filled, then yes.
Also, did you look at the structure, right? I think I talked about market structure before. What is the structure, right? So don't just focus on imbalances, right? You also have to look at what the structure is telling you, right? So
higher low बनाउँदैछ त्यो structure.
Okay, let's keep going.
Okay, keep going.
Can we take long here?
Okay, let's take long here. Our stop loss on this trade, once again, okay, stop is going to be right down here, right below. We can even put it at support. We want a 1 to 2 risk reward. Okay, so let me ask you this. Do you still want to be in this trade or no?
Probably not, because it's way too close to the level.
Okay. Okay, so let's just see what happens if you were to take a long here. Okay, so it ended up working out for you, right? Ended up working out. Not bad. This is pretty close to the high of day that we talked about earlier. Okay, so I wouldn't mind it. The only level I'd be worried about is, okay, is this a support level or not? Okay, let's look at a different ticker. Somebody pick a different ticker.
Can you do Walmart?
Yes. We're not gonna do Walmart. Price action is too choppy.
What about Coinbase?
Pick something that we trade normally.
might do AMD as a trade.
AMD, yeah.
And that'll be perfect.
Okay. I'm not gonna do today's trade, but we'll do AMD.
I think तिम्रो screen share भएको छैन भयो.
Yeah, that's oh, mm, okay. I mean, I have to turn it off so nobody can see.
Okay.
Okay, so we're gonna stay on the 1 hour time frame here. We're gonna do our levels. Okay, you guys tell me if you want to change any levels, anything like that as we go. Okay, so we have AMD here. Okay, we're gonna trade on the 5 minute time frame. All right, every trade you guys take, I want a full explanation on why you took the trade, and then we're gonna put our risk reward, and then you tell me if you still want to take the trade or not. Okay, so let's go and get started here. Okay.
Need to add more support line
Okay.
to break $6.
Okay. Where should I add it, Parag? What, you want it over here? Just tell me to stop.
Should be good. Yep.
Okay.
I think.
Any more?
Yep.
What, you want one here?
Yeah.
Okay, somebody say yep. Okay.
Yep.
Okay, let's go to our 5 minute here. All right, get ready. Market's about to open.
Not happy with that label because the gap on the label, that's the
No, that's fine. Okay, so you guys tell me what you guys want to do here. Okay, this is yesterday's data, this is today's data. Okay, I'm going to go ahead and say short here. Okay, I'm going to target a 1-2 risk reward. Okay, I'm aware that there's a support level here, but once again, I'm looking for an imbalance. I don't know if we're going to get it. Let's see. Okay, so we end up going to profit. Okay, let's talk about this trade. Why did I take it? Why did I take this trade where I did? Okay, why didn't I take a short here? Can somebody tell me why wouldn't I take a short on such a nice candle?
Because there is no volume and a lot of wicking.
No, this right here.
All right.
Okay, there is a lot of volume on that candle. Okay,
The risk to reward would not make sense.
exactly. Okay, so let's take a look at this. Okay, let's do a short. Let's say I get in on this trade and I set the same exact risk reward. Okay, for this trade to make sense now, I have to target all the way down here. Okay, that's a big problem because that means it has to break 1, 2 supports. Okay, same exact trade, but the entry is completely different. You guys see the difference. Okay, so now let's talk about, okay, why did I enter where I did? Okay, I ended up saying I'm going to short right here. Okay, once I've identified wicking, okay, we have a lot of wicking here. The next thing I do is, okay, where's my stop going to be? Well, if we go back above these wicks, I'm probably going to get out. Okay, so my stop is set right around the wicks. Okay, it's not set at the last candle. I don't care about that. I care about, okay, where is there a lot of wicking? Okay, that's how I set my stop. Then what I'm doing, okay, I've already looked at that mentally. Now what I'm doing is I'm waiting for this thing to push up as close as it can. Okay, so as much as this thing pushes, once I am confident in the setup, I am going to take an entry on a green candle. Okay, here's the thing. If you're trading, okay, if you're doing longs, okay, you need an entry on a red candle. Okay, and this is going to be very hard for you guys to grasp. If you're doing shorts, okay, you want a entry on a green candle. Okay, it is a very, very important thing to do because what ends up happening is just because you didn't wait, your entry is going to go from here to maybe down here. Okay, and that's going to be a huge issue whenever you're trading. Okay, any questions there about this entry? So you guys saw I waited for a little wick up and then I took the entry. Could this have been a better entry? Yes, but in my thought process, if we get a candle this big to hold, do you know what can happen? This thing can keep going. Okay, but once I'm in this trade, once again, the thing that kept me in this trade is I set my stop loss. I'm not moving it. I'm not doing anything, and I'm waiting for it to either hit my stop or my take profit. Make sense? Okay, so let's kind of reset here. Okay. Okay. So now let's kind of identify what's happening. Okay, market pushed up. Okay, we have this imbalance. Market came back down. We ended up filling this imbalance. Okay, what can happen with this? Okay, if we zoom out, what can happen now? Okay.
I'll go back up.
Okay. You think it's going to go back up? Yes.
Maybe, yep.
Okay. So Proc thinks it's going to go back up.
Yes.
Okay.
Long.
This is a good candle because it's still low down here. What we're going to do is, okay, we're going to take a long here. We're going to set our stops right below this. Okay. Our risk reward is going to be a 1 to 2. Okay.
Yep.
Does this trade make sense, right? Yes, it does because you guys can see this is kind of the level that we held at last time. It's below
Yep.
my last level. So this is a really good setup. Okay. And it ends up going wrong. That's fine. Okay. The setup was there. We liked it. We made a prediction. That's fine. Okay. As long as we have a 1 to 2, we can lose this trade. We can still make our money back. Okay. We have a candle that's pushing up that has a wick at the top. I'm going to go ahead and say short here. Okay. Now here's the thing. Where am I going to set my stop whenever the last candle was this big? Okay. This is a really, really tricky thing to do. Okay. What we're looking to do is instead of paying attention, because if I put my risk to reward here, everything's gonna get screwed up. Okay, what I'm going to do is I'm going to set my stop based off of these candles over here or the candles over here. Okay, if you guys look over here, we kind of came down at this level and we can see that we kind of made a little base right up there. Okay, so what we're going to do is we're going to make a base just above both of these. Okay, I'm not touching all the way up here. I'm just making a base right in the middle. Okay, and now my 1 to 2 risk reward is set. Does this trade make sense? Yes, it does because it does not touch this level. Okay, so now we can kind of play this through. Oh, okay, so you see right there, it ends up touching the top. Okay, this is where we add the second thing that we have to talk about. Okay, there's this things called hard stops, and then there are mental stops. Okay, a hard stop means that you set a stop loss inside of your broker. Okay, it is a physical stop loss. Okay, so that means that if this stock currently is at what 173 and I set a stop at 172, okay, as soon as it hits 172, it's going to take me out of my position. Okay, I already tell the computer to do that. If I put a mental stop, I'm putting my mouse over the button, but I press it whenever I think it's time to get out of the trade. Okay, for everybody starting out, I recommend you doing a hard stop. Okay, just because to do a mental stop, you have to have a lot of discipline. And what ends up happening with a lot of people is they move their stop loss up and up and up, and they will keep doing this until they blow up their account. They just keep moving it up and hoping the trade works out for them. Okay, so because of that, I recommend starting with a hard stop, and then once you build your discipline, then go to a mental stop. Okay, how many times do you guys get wicked and then the trade goes against you or goes in your favor actually? Right? That's happened to a lot of us where we literally get the top wick and then it goes down. Okay, why does this happen? Because we want to wait for the 5-minute candle, okay, to close. This is a big thing. You have to let the candle close. In 5 minutes, this stock was all the way up to here. Okay, but at the end, it ended up being down here. Okay, which tells us what? That they were selling pressure. Right? So we have to be able to wait for the candle to close, or else what's going to happen is we're going to end up getting out of a lot of trades too early. Okay, so technically this trade I wouldn't have gone out of yet. Okay, let's see if it goes against us again. Okay, not too bad. Okay, so there we go. Okay, so there we go. Once again, okay, another trade that worked out. Once again, if I had a hard stop, I would have gotten taken out of this trade and then it would have went my way. Okay, here's a cool thing that they teach you here. I've seen this on YouTube. I've seen this people actually apply this to live trading and it works. Set your entry, okay, where you would set your stop. Okay, set your entry where you would set your stop. Meaning, okay, if I get into this trade, okay, my entry, I should have placed it here. Okay, now once again, this is easier to say than to do, but we're going to try to apply this in the next trade here. Okay, so I want you guys to tell me long or short. Okay, just like normal, I want you guys to tell me if you want to long something or you want to short something. Okay, let me build out levels down here actually. Okay, did somebody say something?
Let's go
Long from here.
too long.
Okay, you guys want to long?
Oh, sorry.
Okay, so you guys want to long. Okay, let's do 100 shares. Boom. Okay, we're in this trade. Okay, where's our stop loss going to be? Let's kind of take a look here. Okay, we're going to enter here. My stop loss is going to be right around here. My take profit is going to be a 1 to 2 right around here. Does this trade make sense? Let me ask you that. Does
Yeah.
this make sense? Okay, makes sense. Why? Because it's below our resistance, which means that it has room to go. Okay? You wanted your entry here. I'm going to put an entry right here. Okay, so I'm putting in a limit order to enter down here. Let's see what happens. I could be completely wrong. Maybe a little bit lower. Oop, it actually went below. Okay, and then the day ends up closing. Okay, so that didn't work out for us. Okay, once again, the trade was there. Everything was perfect, but the trade ended up going against us. Okay, let's look at a bigger time frame. Okay, what's happening here? Okay, we're in a equilibrium, which means that all these imbalances, okay, that we have are going to get balanced out. It's been happening every single time. Okay, let's go here to a smaller time frame. Okay, and let's kind of keep this going, and then now we're going to add in a new thing into our trading. Okay, this time we are going to scale in and we are going to scale out. Okay, so I want you guys to tell me anywhere from 1 contract to 10 contracts whenever we find a setup. Okay, so far, if we look at our trades, okay, we've lost 56 bucks. Okay, let's keep going. Let's see kind of what happens. No, okay. Okay, once again, I'm gonna go to the 15-minute here. We're gonna skip past some of this data. Okay, we're gonna go back to the 5-minute here. Okay, you guys have all your levels. We're going to delete this once again. And we're gonna wait for market to open over here. Okay, so market just opened here. You guys let me know what you guys want to do.
Long.
Okay, somebody said long. Okay, how many contracts do you want? Do you want 1? Do you want 10? Any or anything in between, up to you. And tell us why.
3 contracts.
Okay. He wants 3 contracts. Okay. Why do you only want 3?
Support is touching the support level.
Okay. Why not 10?
There is no more lot of confirmation.
Okay. So there's not a lot of confirmation, so he's going to take 3 contracts, which this is going to be a C setup. Okay. You said long, correct?
Yes.
Okay. So we're negative on that trade. Okay. So let's kind of keep this going. Okay, we're gonna do one more setup and then we're gonna change it and go back to something else.
One there.
You want to long here?
Yeah.
Okay, you want to long here?
There is a week.
Okay.
I would short.
Yeah.
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 So
Short would make sense.
a long, this is what a long would look like here. Okay, this is what a short would look like. Oops, this is what a short would look like. Okay, let's see which one hits first. Oh, stop loss almost hit on this one. Oops, stop loss would hit on the shorts. Okay, the question is this going to hit take profit? Boom, it hits right to our take profit. Okay, so does they good stuff. Okay, now let's kind of take a step back. Okay. Let's apply everything we've
Prashant bhai,
learned.
sorry, quick follow-up here.
Yes.
Generally, in my experience, what I have seen is like first 15 to 30 minutes of market open is so noisy.
Yep.
It is sometimes goes up so abruptly and goes down so fast.
Yep.
And I have seen like after 30 minutes or so, market is coming back to stabilize itself
Correct.
into the true place.
Correct.
So I I I'm very much hesitant on taking the trade for first 15 to 30 minutes unless it is coming into the good setup. I don't know. Generally, what do you do?
Yeah, I think for me, the first 15 minutes, not 30 minutes, but the first 15 minutes, I like to wait because all the orders that came in the night before, they kind of get executed, and then algorithms don't turn on usually till 9:45 or 10:30.
Okay, that makes sense.
Okay. Okay. So now we're gonna do some swing trade examples. Okay, so this should be pretty fun. All right, I'm gonna share my screen here. Okay, so now we're back to the bigger time frames. Okay, we're still going to have the same risk management principles, but I want you guys to tell me. Okay, kind of like we did last time. Okay, what should we do here? Where should we start? Somebody that hasn't spoken yet. Where should we start? Okay, where should we start?
High and low.
Okay, high. And we must identify our low. For this example, my low is going to be down here. Okay. Now we have to look at this price action and say, okay, where is their levels? Okay, where is their supply and demand zones? Where are their levels? Okay, where does price kind of reject off of the most? Okay, for me, I'm going to start out off kind of up here. Okay, and then I'm going to work my way down here. Okay. And once again, it's your guys' responsibility to tell me if I made a level right or wrong. Okay, what do you guys think? Do you guys like these levels? Should I fix anything? Okay, I'm guessing you
Supply
guys.
zone is too high. You need to.
Okay, you want me to fix my supply zone? Okay. Let me try to fix it here. Okay, let me fix the zone. Okay, should I leave it there or do I want to move it down here? All right, I'm gonna move it down here. Okay, are you guys pretty happy with this now? I think everybody likes it. Okay, maybe I'm missing a level right around here. Okay, anything else I'm missing? I don't think so. Okay, so
Draw the trend line.
okay, how do you want me to draw a trend line?
Short term is like going down, right?
Like this.
Something like that.
Okay, then we have this trend line to the upside too. Okay, so let's kind of break down what's happening here. Okay, let's add everything we've learned today so far and everything we learned in the last few classes. Okay, short-term uptrend. Overall, we're in a equilibrium. Once again, market is very flat inside of the zone. Okay, short term, we have a downtrend, but we can't validate this because it's too directly down. Okay, once again, we're gonna play the game. You guys tell me long or short. Okay, this one's gonna go by faster.
So
Okay. Does anybody want anything here?
Sure.
Short?
Yeah.
Okay. Whoever said short. I was thinking the same. Okay. Where are we going to set our stop loss? Somebody tell me. Where do you want to set the stop loss?
Middle of the big wick, before the support.
Right here?
The rate quick drop.
Okay, tell me to stop.
Yeah.
Right there.
Somebody tell me to stop.
Yeah, I'll go a little bit up.
Up here?
Some of the weight. Some of the weight. Slightly up.
On top of this wick?
Yeah.
Right there.
Okay. Take profit. I want a 1 to 2, which means I need to make 600 and or no $740. Okay. Okay. Do you guys agree? Do you guys like this? Do you guys not? Somebody tell me. He wants his take stop loss here.
No.
Take profit here.
Stop
I
loss
don't
is
like
too up.
Okay. Proc said it's 2 up.
Yeah, me too.
Okay. If you look at this here, okay, if you set a stop loss this high, you've already completely given up so much of your profit.
Yeah.
Okay. This stop max should be here. If not better, it should be right around here. Okay. So your stop needs to be a little bit tighter. And now we're only risking 188 per contract or per 100 shares. And we're looking to make what? 188 times 2, that's what? 376? Okay, so we're looking to go here. Oops, I don't know why I didn't take that. Let me set this up again. Okay, so our stop loss is going to be right around here. We want a 1 to 2 risk reward. Okay, let's see if this trade plays out. Ooh, okay. Candle closed right here, did not close above here, so we're still good. Oh, that candle would have taken us out. Okay, so I'm gonna write this down. 1 to 2 L. Okay, let's keep going. Okay, you guys let me know when you want to take the next setup. My gosh. Okay, and you guys can tell me to readjust or do anything once again.
यो क्यान्डल अलिक ठुलो बनाउनु देखिन्छ कि
Okay, so just by nobody speaking, we completely just missed a huge setup right here. Okay, I don't know if you guys didn't see a setup or something like that, but once again, just because we have a supply zone does not mean it has to go all the way up to a supply zone. Okay, if you keep this up, you are going to miss a lot of setups. Okay? Whenever we have two channels here, okay, our best risk reward, especially on a swing trade, is going to be up here or down here. Okay? Remember, there's always four possible setups that we can have. We can have this breakout, we can have this break back down, we can have this break up, or we can have this break down. There's always four possible setups. You guys just missed one, two of them.
Can we take a long here?
Thank you, Monday. Okay, Monday wants to take long here. Okay, where are we going to set our stop loss?
Right below that level, maybe, or
Down here?
no, not too much. Below the wick on the green candle.
Right here?
Yeah.
Okay, we're
Yeah.
setting our stop here. We're setting our take profit 360. We want 720. Okay, let's see what ends up happening. Oh, took you out of the trade. Okay, took you out of the trade. Okay, what went wrong here? Okay, what went wrong here in this trade? Right, what went wrong?
Maybe imbalance.
It's
Maybe
a
imbalance
downtrend.
failed.
One day, did you forget this? Okay,
We,
your
we would
entry.
have wait on the retest.
Okay, we would have waited on the retest. Okay, so your risk reward is hugely dependent on your entry. Okay, that's what I've been trying to get across from you guys. Okay, it's greatly dependent on your entry and where you're able to get in. Okay, it's going to either make or break your trade. We can go to let's just go to SPY. Once again, we'll just use SPY for an example. Okay, once again, we always have low of day and high of day. Okay, if we're taking calls and we are past high of day and we come below high of day, this is the trade has to be below or at high of day. If we're taking puts and we're taking it in the middle, it has to target down here first, and we need a minimum of a 1 to 2 risk reward. Okay, ideally our risk reward is going to be a 1 to 3. Just a recap here. Okay, if you have a 1 to 3 risk reward or higher, then in the long run you are going to be a profitable trader. Okay, we're not going to get too much into contracts and stuff like that. We're going to have a different class for that. Okay, so once again, we're just kind of looking at shares, but no matter whether you're trading options or shares, your risk reward is going to remain the same. You are going to trade the candlesticks. Okay, you must wait for the candlesticks to close once again. Okay, what type of stop loss should you guys start out with? Somebody that hasn't spoken, somebody that has not spoken.
Hard,
Okay, why should you start with a hard stop loss?
because the computer does it for you.
Okay, but why? When I can do it myself, why would I want a computer to do it for me?
Because you're not in full control of your emotions. Your psychology comes in play, maybe.
Yes, okay. Our discipline is not built yet. A lot of you guys, I see you guys having very, very itchy trigger fingers, okay? Your discipline is not built yet. You need to set hard stops. If that means it's going to hit your stop loss, that's fine. Okay? Now let's talk about scaling. Scaling. Okay? Here's the rule of thumb, just to begin with. Do not add to a loser. Okay? We do not add to a losing trade. That means if we buy puts here, okay, or we short the market here, I'm not going to add as I go. Okay? I'm not going to average into a trade. unless there is confirmation. Okay, best example I can give you guys is Apple yesterday. Okay, this was Apple's chart. I'm just going to remove all this crap. So if we look at Apple yesterday, you guys can see here that we had this level right around here. And I think it was what, 239.50 that was not able to break. Okay, we ended up taking Apple, I believe it was right around here somewhere. So we ended up getting an entry over here somewhere. Okay, I started with 5 contracts. Okay, I added another 5. Okay, on this drop, I sold 5. Okay, and then I added 10 up again, and then I sold it right around here. Okay, I ended the day with 20 contracts. Do you know how much I made? I made $30. Okay, horrible trade because my risk to reward was terrible on this trade. Okay, one thing, once again, we always do is we always we follow our plan. Okay, we need a minimum 1 to 2. Until we get 1 to 2 risk to reward, we are not going to get out of this position. Either your stop loss will hit or your take profit will end up hitting. Okay, any questions there before we get fully into scaling? Okay, let's talk about scaling into a trade.
Hi, hold up.
Yes.
BNI has a question. It looks like he raised his hand.
Okay.
BNI, go ahead.
But if we have a like heavy contract, does hard stop work in same price? Like, does it sell in same price or no?
Yes, if you have a hard stop, it will sell at the exact price whatever you set it. Sometimes
Heavy contract, like 20, 40 contracts.
yes, depending on what broker you have, it won't sell immediately. If you have like 100 contracts, it's going to take a few seconds for it to sell. But yes, even if you are in heavy, it will sell long as there's liquidity and there's a buyer. Okay, we're going to talk about scaling. Okay, and then we're also going to talk about hedging. Okay, this is where we kind of get into the more complicated side of trading. Okay, how do we scale into a trade and how do we build out a position? Okay, I'm sure you guys see on Flow that whenever hedge funds are trading, okay, they're not adding a million contracts here, okay, and they're not adding a million contracts here. The way they're doing it is they're scaling in 100 here, they're adding another 100 here. Okay, even on the drops, they will add. Okay, because they are confident in their trade, but you cannot confuse this with adding to a loser. Okay, the way whenever funds are trading, okay, they have a target. So the first thing we always start out with is a target. Okay, this target cannot be based off of you, it has to be based off of the chart, or in this case, it has to be based off of fundamentals, GEX, order flow, whatever you decide to use to be a trader. Okay, but we need to start off with a target. Okay, let's use Amazon for an example. I think Amazon is a great example. Okay. We're currently in a Amazon position. We have 235 calls, which means that we think Amazon's going to be at 235 or above. It's currently at 231. Okay. What is happening with this chart? Let's break this down. We're at a uptrend. Okay. We're here at a demand zone. Okay. I'm adding a few confirmations. The flow is bullish. Okay. And GEX is good as well. So we have 4 confirmations. This is a A+ setup. Okay, how do we make this trade as profitable as possible? Okay, we have a few options. The normal trader, what he or she does is they will take a full position here, let's just say 10 contracts, and then they'll wait for price to go up. Okay, there's nothing wrong with that. The problem is you are taking risk every single day you're holding this. Okay, once again, we're not going into options too much, but you're going to slowly start losing value in your contracts and you are exposing yourself to too much risk. Okay, so the way we do this is we build cash flow. Okay, we build cash flow on these trades. The way we do this is we scale in and we scale out throughout the trade's life cycle. So for example, if I know this thing is going to go up here, okay, I'm going to slowly scale into, let's say, 10 contracts here. Okay, once I've scaled into 10 contracts, what I'm going to do is once this thing pushes up, okay, right around here, I might sell 5. Okay, I'm going to sell 5 down here. Okay, if it comes back to my level, I'm going to add another 5. Okay, and what we do is we build cash flow as we go, and what ends up happening is we end up being able to build a cushion for ourselves. Okay, now once again, this is a more advanced strategy. Let me see if I can show you guys a cleaner chart here. Yeah, let's look at CRWV. Okay, so I'll kind of look into CRWV. So if our target right here is, let's just say 130, our target is 130. Currently, the stock is trading at 122. Okay, we have about $8 of potential upside. Okay, we have a potential of $8 upside, which means that I should be risking either $2 or $4 on this trade. I'm not talking about contracts, I'm talking about the dollar value. Okay, out of that $8, I am willing to make a full $4 on this trade. Meaning that once this thing, it's at 122 right now, once it goes to 126, I'm going to sell most of my position. I'm going to scale out. Okay. And with that profit, I'm going to buy back 5 more contracts. So technically this trade now is risk-free to me. Okay. I'm able to either go in heavier or I'm able to add more size to this trade by building cash flow throughout the trade. You guys will see this happen with the funds. You guys will see this happen with all big institutions. Okay. They're not adding, and that's why price action kind of looks like this, is they're not adding in one place. They're adding as they go. Okay. And they're building cash flow so they can build up bigger trades. Okay. Any questions about that? Any questions about that? Okay. Let's take a look at TradeZella here. I'm going to open up this account. Okay. Let's take a look at TradeZella here. We're going to recap some of these trades once again. Oops, this is for, why isn't, okay, here we go. So let's just take a look at this trade over here. Not UNH, we're going to go back. We're going to look at this trade right here. Let's look at Amazon. I don't know if this is going to be the right one that I'm trying to look for. Okay, let's go to a bigger time frame. Okay, so here we go. So if we look at this trade, we had 8,600 shares traded total. Okay, what did we do? If we look over here, let me see if I can make this full screen. If we look over here, what we ended up doing, it was, let me go to a white side. So we added, how many shares did we add here? I don't know if it'll show us. It won't show us. Okay, so let's just say we added 100 shares here. Okay, we added 100 shares here. Actually, I think this is shorts, right? Trying to find, doesn't say what this trade is. Yeah, so we actually shorted shares, not longs, not bought shares. Okay, so you guys can see here. Wait, let me look at this. I just want to make sure this is correct. I'm giving you guys correct information. I don't know if this is bought or sold because we did have profit on this trade. Short. Sorry, I'm confusing this trade right now. Let me go to this one. Okay, this definitely looks like a short. Okay. So you guys can kind of see, okay. So you guys can kind of see how we kind of did this trade. Okay. Let's kind of break this one down. This one makes more sense. Sorry about that. So if you look here, we ended up adding here. Let's just say we added 100 shares here. Okay. We end up scaling into another 100 here. We end up scaling into another 100 here. Okay. And then whenever we scaled out, we didn't just sell all here. We ended up scaling out. And what this ends up doing is this is building cash flow as the trade develops. Okay. And it gives us a boundary. So whenever we go and add to a trade, once again, let me try to find this. Let me just go to, I think Tesla. Let's go to a bigger time frame here. this is still not the trade I'm looking for. Give me a sec, guys. Let me find a good trade. Okay, so this trade right here, okay? You guys can see over here, we bought, these were the 590 puts, okay? So we scaled into a trade, okay? And then I actually added a few, okay? I scaled out and then I continued to add. Okay, so what we're doing here is we're taking one trade, okay, and we're cutting it. And whenever you guys see those block orders, okay, whenever you see on flow, you guys see the split orders, okay, this is how they're done as well. Okay, is what's happening is they're putting it through different exchanges, and what we're doing is usually we're doing through the same exchange, Robinhood, whatever you do, Thinkorswim, stuff like that. But the general idea is the same of what we're looking to do is we're looking to cut up our order to develop cash flow, okay, and to lower our risk because remember, we're risk managers at the end of the day. Okay, sorry if that was confusing. I don't know why TradeZella is acting weird. But at the end of the day, we're looking to try to get a better average fill. We're looking to get a better price, okay, on our trade. Now, this, once again, if you're not trading on a larger account, it's not going to be super relevant to you. I don't think you should be doing this on any account smaller than $100,000 just because you have to be able to scale in and out really well. And on top of that, you have to have a high conviction and you have to be able to hold your trades. Okay, once again, if it doesn't go to our TP or our SL, okay, target price or our stop loss, we don't end up selling it. Okay, and then the last thing I will quickly go over here, we have about 10 minutes here left before this turns into a 2-hour class, is we're going to be talking, and this is going to be much more advanced, but I should go over this, is we're going to talk about hedging. That is not spelled right. Okay, hedging. I'm just going to put an H there. Okay, so let's kind of talk about hedging. What is hedging? Okay, there's multiple different types of hedging, but hedging is pretty much you protecting your downside. So the best example I can use is let's look at my portfolio right now. I have Apple, I have Amazon, I have Tesla, I have CRWV. Okay, I have all of these, and these end up giving me a positive 550 delta. Okay, which means that if the market pushes up $1, I'm going to be up $550. Okay, but this also means that if the market drops, I'm going to be down $550. Okay, that's a lot because we don't know what market's going to do tomorrow. So how do we protect ourselves from that? Okay, by hedging our position, by lowering our delta. Okay, this is called delta. Okay, there's two types here. There's dynamic, okay, and there's static. Now, once again, small accounts shouldn't be doing this unless you know what you're doing. But there's dynamic. Dynamic hedging means that the portfolio automatically balances for you. 99% of you guys are never going to be really doing this. Most of you are going to be doing static hedging. Static means that, okay, my delta is 550. I'm going to buy SPY puts and I'm going to hedge against my portfolio with that. Okay, so there's no crazy algorithm that you need or anything like that. So because my portfolio had a 550 delta, okay, this is what we refer to as exposure. Okay, this means that this is fully naked in the market. Okay, soon as the market comes down or it pumps up, this is going to get affected. Okay, this is my bottom line. So how do we protect against this? Okay, just like in math, a positive, okay, we're going to bring in something negative. Okay, as corny as that sounds. Okay, so what we're going to do is we're going to take our 550 and we're going to add, okay, remember, calls have positive delta, puts have negative delta. Okay, so now what we're going to do is we're going to bring in puts. For today's example, I brought in 4 SPY puts, okay, and I got my delta down. I think it was 172. Okay, so 550 minus 172. Okay, and we ended up being able to hedge this. I think it's like 3 something. What's the math on this? 172. Okay, it's about 378. Okay, so now my delta exposure is only 378. Okay, usually the rule of thumb is you want to try to get this to 0 as close as possible, but you need some type of algorithm because remember, your delta, okay, is going to keep moving throughout the day. Okay, no matter what market does and stuff like that, it will move. And nobody really has time to look at their positions, and we don't have any tools available for that. Okay. The other thing is you don't want, okay, if you're in a, let's say, $5,000 position on calls, okay, you don't hedge using 5K inputs. Okay, this is not the right way to go. Okay, usually you want to do 20 to 30% of your total portfolio hedge. Okay, that's why I only ended up hedging, once again, ended up hedging 172 out of the 550. Okay, so now the thought process is if the whole market starts coming down, those puts are going to at least pay for the time decay and stuff like that. So my contracts have enough time to run and get to their target. Make sense?
Prashant, I have a question here.
Yes.
So your delta is 50%, 0.5. So you said you have 4 different portfolio, and the different portfolio could have different deltas
Correct.
for the given moment of time. So
Correct.
do you just roughly take the average delta? For example, something can have 0.6, something can have 0.45, 0.5.
So on IBRK, we
Uh-huh.
actually have a tool where we can put in what we want our delta to be, and it spits out whatever we have to get, if that makes sense. Okay. So
Okay.
there's a risk tool. So what I ended up doing is I ended up finding, okay, these puts make the most sense because the theta is going to be low on these, and I have enough time to, because my biggest worry is just tomorrow, right? If I can get by tomorrow and the market doesn't jump, I don't mind taking $100, $200 loss on those SPY puts. What I don't want to take is I don't want to take the whole portfolio down with it. Right?
Okay.
So Thinkorswim has a tool for this as well. It's called your Analyze tool. You can search it up on YouTube. We're not gonna have time to go over it today. So does Interactive Broker. Interactive Broker actually has it to where I can put in all of the trades that I'm in, and then it will actually balance out the portfolio for me. Okay, so this is a much more advanced thing. Once again, if you're not trading on a big portfolio, I would say at least 25K plus. Okay, you don't need to worry about hedging. Okay, you're not going to be hedging a 5K portfolio unless you're long on every single tech stock. And at that point, I would say you probably have an issue. Okay, so that's kind of the only time I would really be looking to hedge. I know a lot of people that hedge using futures and stuff like that as well. I haven't gotten too much into that, so I don't really think I have kind of a place to speak per se on that. But I know that people do also hedge using futures. For me, I just like to stick with options and stocks, okay, to build out my hedges. Um, if you're also longing a stock, okay, there's multiple different ways for you to hedge your portfolio. There's a thing called a costless collar. Okay, a costless collar. This also goes into your risk management. What ends up happening is, okay, let's say Arjun wants to buy 100 shares of, I don't know, SPY. Okay, Arjun wants to buy 100 shares. He buys them at 660. If it drops $10, okay, he's going to be negative 1,000. So how does he protect against this? Okay, what he ends up doing is, okay, Arjun knows that this thing is going to go to 680. We're going to do a 1 to 2 risk reward. So this is our target is 680, which means that for him risking 1,000, he can make 2,000. Okay, so Arjun knows if this thing goes to 680, it's going to be worth $2,000. He's gonna be up on his portfolio. If it goes down to 660, it's gonna be worth 1,000. Everybody understand the math here? Okay. So now what we end up doing is we know our target is 680. We are going to sell 680 call, and we are going to buy a 660 put. Okay? Arjun Kiran you guys know about this. What happens when you sell a call? It becomes a covered call.
Yeah.
Okay? So this pays you money. Okay? But remember, we bought a put, right? We have to pay for okay? This is like you are paying for your insurance on your house, on your car. Okay? We have to pay for this insurance. I don't want to pay for the insurance. Okay? I'm cheap. So what are we going to do? We're going to sell a 680 call, and theoretically, the goal is we want this premium that we get from this to pay for this put right here.
Yeah.
Okay, this is called a costless collar. You guys can search online about this. Okay, this when you're buying long-term shares, this is the best way to hold on to your trades for the longest amount of time and get the maximum exposure you can. Okay, it's called a costless collar. A lot of funds use it. We see it on the flow all the time. Okay, so this is something worth looking at. It becomes our insurance, and the insurance ends up actually getting paid for because we're literally just selling a call which we were going to sell anyways. Okay, so we kind of get a free put here, per se.
Only the drawback is upside potential is capped with 680.
Yep. So the only drawdown, once again, the only downside is if it goes over 680, you're only going to get 680. You're not going to get anything more.
Yeah.
Okay. But for it protecting your butt, I think it's worth it in my opinion.
Exactly. Makes sense.
Okay. There's also this thing called tail risk. Once again, these are pretty big terms. Okay. Tail risk. Tail risk. Okay. As the IV increases, okay, our tail risk gets more expensive. You guys see how people are hedging using the VIX now. You guys see people are using DIA. Okay. This is because SPY is getting really expensive to hedge against. Okay. Because it keeps building up and up and up. Guess what? The premiums are just going to get expensive because the drops is going to be as bigger. Okay. So those are kind of things that we kind of have to watch out for as traders. Once again, a lot of these things that we talk about in this last section, they're not going to apply to you guys. Okay. Starting tomorrow, the way we take our trades is going to be different because now you guys know a decent amount of risk reward. The best thing is going to be you guys actually see how we do it. Now we're targeting 1 to 3 risk rewards. Okay, we're not targeting 1 to 2 anymore. Okay, I was doing that with you guys, kind of looking at, just before you guys learned all of this. Now we're only targeting 1 to 3. If we don't get a 1 to 3, I don't even want the trade. Okay, which means that our entries are going to get better. Okay, and funny enough, entries, that's going to be tomorrow's class. Okay, so tomorrow's class, I'll quickly go over what we're going to go over. Tomorrow's class is going to be trading strategies. Okay, we're actually going to break down the things I look for whenever I enter a trade. Okay, what are the rules, right? What is going to be, how are we going to forward test this? Things like that. How do we actually back test the strategy once we actually have a strategy? Okay, those are going to be all the things we're going to be going over tomorrow. We're probably going to show you guys about 3 strategies you can apply. Once again, you don't need any indicators. We're just going to be using our price action, our levels, and our supply and demand system. Okay. Any other questions today before we get off?
I have a question. This hedge गर्नु भनेको जस्तै अप्सनमा मात्रै काम गर्छ